You all are warmly welcome to the complex group discussion. The first of all, we are go through with the theoretical stuff, the counting for complex group. The term complex group refers a situation where a parent entity controls a subsidiary without directly owning shares. Instead, it owns the shares indirectly via another subsidiary. In such situations, we call the third entity a sub-subsidiary of the parent. If I draw a diagram, the parent is own, let's say 60% of the subsidiary, and that subsidiary own, let's say, another 75% of another subsidiary for S, another subsidiary for S, let's say it is SS. In point of view of S, it is a subsidiary for S, but uh, the point of view of S is it is a sub-subsidiary, but sorry, the point of view of S is subsidiary, but the point of view of parent is it is a sub-subsidiary. Therefore, we call this P as a ultimate parent. This is the subsidiary. This is a sub-subsidiary of the parent. So in a consolidation, we prepare the consolidated statement, financial statement on the perspective of the parent. In such scenario, the parent is identified as the ultimate parent, and subsidiary S is a subsidiary, and SS is a sub-subsidiary to the parent or the ultimate parent P, right? That is referred in here. For example, in a situation where, the ultimate parent P has a subsidiary H, and H itself has a subsidiary of S. S is regarded as a subsidiary of P and a subsidiary of H. For example, it is a situation where the ultimate parent P has, the parent ultimate parent is P. The P has a subsidiary called H. Let's draw a sketch diagram. P, it has a subsidiary called H. P, it has a subsidiary called H, and H itself has a subsidiary of S. Sub-subsidiary of S. S is regarded as a sub-subsidiary of P. Yes, that is a sub-subsidiary of the P. Parent perspective view, this is a sub-subsidiary. Therefore, be line by line consolidation in P's consolidated financial statement. For accounting purpose, we refer to S as a sub-subsidiary of P. That is correct. On the parent's perspective, this S is treated as a sub-subsidiary of the P. S is a sub-subsidiary and it does not affect how it is consolidated. However, certain matters do need to be created with particular care. The computation of the NCI in the sub-subsidiary, when we discuss the questions, we can identify the effective date of acquisition, the computation of the goodwill, the elimination of intra-group investment and investment income when computing the NCI, right? There are two types of complex group. So we firstly identify the vertical group. Let's say vertical group in the sense the parent has 60% ownership of the subsidiary. In return, the subsidiary owns 70% of the SS. In such a scenario, we call this as a vertical group structure. Let's look at this picture very carefully. You can see the ultimate parent is P. It owns 60% of the S. This is a subsidiary on the point of view of the parent, and S in return have 70% of the SS. This is a subsidiary, indirect subsidiary of P. How it is come? P on S, S on SS means indirectly it implies that P controls the SS, because P on S, S on SS. The ultimately S is controlled by whom? The parent P. In return, it implies that SS also indirectly controlled by the parent. The mixed group structure, sometimes we referred as a D-shaped group structure, that is like a D shape. It means the parent, let's say, has a 80% investment of S. In return, S have 60% of the investment of SS. In return, the parent also have direct investment in SS. In this scenario, this is seems like a D shape. We call as a D-shaped group structure. There is nothing hard things. The P on 60% of the S on 50% of the SS. In return, the P directly holds 40% of the SS. This is a mixed or we called as D-shaped group structures. D-shaped group structures. With that understanding, a vertical groups, the existence of the parent with a sub-subsidiary that has another subsidiary with its subsidiary is what defines a vertical group. In simply, vertical group in the sense the parent has a subsidiary, that subsidiary has a sub-subsidiary. That is the simple meaning of the vertical group. To ensure proper financial statement consolidation, the influential group ownership in this sub-subsidiary must be computed and considered. This means a careful analysis and consideration of the ownership and control structure between the parent business and the sub-subsidiary are necessary when implementing consolidation, right? The mixed O, I told you that it is referred as a D-shaped group. Conversely, a parent business with a direct and indirect ownership interest in sub-subsidiary define mixed O D-shaped group structure. So let's look at this first example. P made a 75% of investment of for 40 million in S on 31st December 2021 when the net asset of S is stood at 48 million. Issues the 48 million net asset comprised with the stated capital 24 million, retained earning also 24 million. After that, firstly, it is acquired subsidiary. Later on, it acquires sub-subsidiary. The scenario is subsidiary first acquired, after onwards, the subsidiary acquired another subsidiary. For that subsidiary, on parent's perspective, we call that subsidiary, the is acquired subsidiary as a sub-subsidiary. Right? S made a 60% investment, 20 million in SS when the net asset of SS was 30 million. The categorization of the net assets is issued capital 20 million plus retained earning is 10 million. None of these entities issues new shares since 31st December 2022. There is no impairment of goodwill. The group policies to measure NCI at proportionate share. That means in basic consolidation, you learn that NCI is a two types. We can either a fair value model, that is easy method, and the proportionate net share at the date of acquisition, right? The statement PSSS. So we know that P is the ultimate parent, S is the subsidiary, and SS is the sub-subsidiary, right? Required prepare the consolidated statements. So let's look at this question. So the group structure identification. Firstly, let's see my screen. I think the screen is visible to you all. The parent P acquired how many percentage? 75 percentage. 75 percentage of S is acquired 60% of SS. In this scenario, the parent, ultimate parent P and S is a subsidiary and SS is the sub-subsidiary for the parent, right? Right. So we know under the BRG you learn this type of course, the parent and only one subsidiary. Now we have another sub-subsidiary. In that case, on you directly own, the scene is, guys, the parent directly owns its subsidiary. But the thing is, it doesn't directly own its sub-subsidiary. It owns its sub-subsidiary via who? The its subsidiary. ඉගැන මේමනේ parent S directly all කරනවා. But SS parent directly all කරන්නේ අතරමැදි S හරහා තමයි SS control කරන්නේ. In such scenario, we want to identify the effective group interest of SS by P. Right? It is easy. It is easy. Effective interest, group interest, it is calculated 75% into 60%. 60% when I calculated in here, 75% into 60%, that is 45%. It means the NCI of SS on the group perspective is 1 minus 0.45 means 55%. This computation is needed for the consolidation, right? Right. So with that note, we can start the consolidation requirements. P, S, and SS. So give me 1 minute. Again, back to the question, please. P made 75% of the investment. So the cost of control account is needed. So the COC account, such COC account for the S, cost of control for the S, and COC for SS. The return earning for its subsidiary. Return earning for its subsidiary, sub-subsidiary, and the consolidated return earning. Consolidated return earning. And what account? And the NCI account. NCI account. NCI, non-controlling interest, and the stated capital. Stated capital of S, and we need another account, stated capital of SS, right? Stated capital of SS. Right. So with that note, we can start. So let's put the opening balances. So let's go to the SOFP, this consolidated statement of financial position. You can see the retained earning consolidated 60, 48, 30,000. High. The consolidated return earning 60,000. The balance brought forward, BBF. And the subsidiary return earning, how much? It is 42,000. 42,000 and sorry, 48 and 30,000. 48,000. 48,000. And here it is 30,000. 30,000. 48,000. Here it is 30,000, isn't it? 30,000 is the height. Yes. Right. So with that note, we can start. So we can directly recognize the investment made by whom? The parent in order to acquire its subsidiary 75 to 40 million. Right? The investment account is credit and the cost of control is debit. Right? Investment 40 million. We are using the 40,000, let's say. Right? In the acquisition date, we had the net assets stated capital. So we first, again, we need to put the opening balances of stated capital as well. Stated capital for 24, 20,000. 24, 24, and 20,000. That is BBF, the brought forward balances. BBF, right? Right. So let's say at the acquisition of parent by its subsidiary, we had a stated capital 24,000. In now, you can't recognize the stated capital 24,000 as it is. Out of that, you can recognize only 75%, 24,000 into 75%, 18,000 you can recognize. The stated capital is debit, cost of control is credit. 14,000, sorry, 18,000, 18,000, right? COC of S, right? Remaining goes to whom? The NCI account, remaining because we own only 75% at this because this NCI is a proportionate method. In such case, you can't recognize, you can recognize up to 75%. Then the cost of control account credit and stated capital of the S is debit. Remaining balance, the remaining balance, because it is 24,000 no issued capital, remaining balance goes to whom? The NCI account. It is 6,000, the NCI account, NCI, non-controlling interest, right? So NCI account, where is the NCI account? NCI account is crediting in stated capital, it is 6,000, 6,000, right? NCI account is crediting, right? Stated capital of whom? Because we have two name, better to put the company name S, right? So again, we have similar way, retained earnings 24,000, retained earnings. So 24,000 out of that, you own only 75%, only 75%. It means 18,000. The retained earning of S, it is 18,000. QOC of S, right? So because in the date of acquisition, you have the return earning of 24,000, 24,000 out of that 18,000 is goes to the cost of control account. The remaining goes to the whom? Remaining 6,000, remaining 6,000 goes to NGI, NGI. NGI return earning of S, it is again 6,000. Am I correct? Yes, return earning of S, it is 6,000. Similar way, you can recognize the investment. Then firstly, we deal with this and on estimate 60% investment 20,000. You can't recognize directly that 20,000 because only we acquired 60%. Because this is acquired 60% only, it's SS. In that case, in such investment, you can't recognize 20,000 as it is. Only to 75% you can recognize because you own S up to which percentage? Up to 75%. In that case, S made some investment on SS, but you directly not own SS. You own the SS via whom S. In that case, the parent can recognize such investment up to parent ownership of its subsidiary. In that case, the investment, we can recognize 20,000 into 75%, 15,000, the remaining 5,000 because the investment is 20,000, the remaining 5,000 made by whom? The NCI shareholders. Investment of SS, right? The NCI shareholder. I think it is clear for you. The similar way, the retain again, again, you can see the issued capital is 20,000. In that case, the issued capital is 20,000. The stated capital, it is 20,000. Out of this 20,000, you own whom directly by 45%. 45%. It means 9,000. Then the stated capital of SS is debit by 9,000 and the cost of control is credit by 9,000. This is the reference COCSS. COCSS. And the remaining goes to NCI. Remaining goes to NCI. It means 11,000. ඔක්කොම 20,000 20,000 9,000 අපිට and remaining goes to NCI. Am I correct? Yes, I'm correct. 11,000 goes to NCI. NCI account should be credited stated capital of SS. It is 11,000. Sorry. NCI account is credited stated capital 11,000. Right. I deal that one. Then you can see retained earning. It is 10,000. The retained earning balance is 10,000. Retained earning is 10,000. Out of that, you can recognize only 4,500 because 10,000 into 45% because they here you want 45%. It means retained earning of SS. It is cost of control SS, and the remaining goes to whom? LGI. It means 5,500, right? 5,500. Mm. Retained earning 5,500 NGI, right? NGI, the return earning of SS 5,500, right? I think now it's clear. So we done this one, and no NCI is later on we can recognize. Now adjustments are done. Just then now this is a basic one. Now we can compute this consolidation adjustments. And here you can see it is, right. The goodwill is 4,000 in here. The goodwill, let's say GW, and here again also we can recognize with the sum. With 1,500, the goodwill, right? No gain on bargain purchase, right? So return earning. So we want to deal with the return earning because now this 4,500 remaining is how much? 48,000යි. 48,000යි 18,000යි 6,000යි අයින් කරාම කීයක් ඉදද? 24,000. 24,000 out of that 24,000 75% owned by whom? Parent. So the consolidated return earning 24,000 80,000. The consolidated return earning, this is return earning of S. The remaining goes to whom? NCI 25%. NCI. This is a post-acquisition one, right? Not pre. NCI return earning of S for 6,000. I think it is clear. This is post, right? Right, done. Return earning of SS 30,000. 30,000. Out of this 30,000, 10,000 is go outside already pre. It means 20,000 is left remaining. Out of that, we want only 45%. It means consolidated return earning. Return earning, it is 9,000. 9,000. And the NCI is 11,000. NCI is 11,000. NCI, for the NCI return earning of SS, it is 11,000, and consolidated return earning is 9,000. Return earning of SS. These accounts, the stated capital account is closed. Yes, no anything. Just we can just balancing this state capital, sorry, consolidated return earning account. Consolidated return earning, How much is that? 87,000. I'm not going to write because we don't have any debit balances in there. Right? The NCI account, what is the balance? Go to the NCI account. I'm not well today, that's why I'm sorry extremely for that. 40,500. Hmm. CT, right. Then our consolidation is over. This is a simple one. So let's just line by line addition. Let's write consolidated SIP RS. This we are using thousands, right? Right. Just line by line addition. Non-current assets, there is no any disposals, NCA, non-current assets, just line by line addition. We have 60, 40, 40. It means 110,000, 140,000. So we have again a goodwill. Goodwill again. Goodwill, how much is that? 5,500 because we have goodwill. Goodwill again, net current assets. Net current assets. Net current assets. How much is that? 20, 12, 10, 20,000, 12,000, 10,000. Total asset, how much? We don't have any adjustments. We have total asset, how much? 187,500. 1,80,500 CI. Total assets. Total assets. Make equity and liabilities. Equity and liabilities. Stated capital, the parent portion is 60,000. Equity and liabilities, it is 60,000. Stated capital. And again, we have what? Retain consolidated return earning is it is how much? 87,000. Consolidated return earning, it is 87,000. And the NCI, non-controlling interest shareholders, the minority shareholders portion, it is 40,500. The NCI, we don't have anything. So let's go to that one. Then we can balance it. I think it is balancing. Yes, it is balancing. You can see here the total equity and liabilities. So that is okay. Then we can go ahead with the consolidated comprehensive income. Consolidated income statement. So since do not have any P&L adjustment in there, so we do not have just line by line addition. Just line by line addition. So we have NC the revenue figures. Just go ahead with that revenue. Make revenue we have to 200,000, 160,000, 120,000. Again together it is 480,000. 480,000 revenue. 480,000 revenue because again we have cost of sale. We have 240,000 minus minus cost of sales. We have GP, gross profit. We don't have gross profit. Gross profit, gross profit. We have other operating expenses. Other operating expenses. Again, we have other operating expenses. We have 50, 40, 90, 120,000. Am I correct? 120,000 other operating expenses. Then we have investment income. So it is in consolidation, we do not recognize intergroup investment income. So we keep remember that. So we do not recognize such investment income. So profit before tax, PBT, it is this minus this. It is 120,000 again, profit before tax. Then we deducting the tax expense. It is 40,000. This 30, 10,000, 40,000 it is. Income tax. Income tax. So here that is a deduction mark, right? So we want to keep remember. We have the deductions, right? Right. Income tax, then profit after tax. We can recognize the PAT, not profit after tax. PAT. Profit after tax. Profit after tax. Can start profit attributable to profit attributable to profit attributable to parent shareholders and the NCI. So we firstly recognize the NCI portion. So need to have here 80,000. Such distribution is needed. 80,000 distribute among NCI shareholders and the parent shareholders. How to distribute now we're gonna discuss, right? 80,000 because the always statement start with NCI. So firstly we are going to identify the NCI portion. So NCI profit earned by S, it is how much? It is 34,000. 34,000. Here you can see the profit for the period of S, it is 34,000. Out of that, we had a investment income intra-group. So that need to be eliminated, right? Profit after tax, I hear S and SS, no, NCI is arising S and SS because P is profit 100% we own, right? The PAT profit after tax of S is how much? The PAT profit for the period is 34,000. I think you agree with me, 34,000. Profit for the period, right? Uh, Out of that, 6,000 is the investment income intra-group of X that need to be eliminated, right? Intra-group. Intra-group. Yeah. Investment income, I'm not going to write because I don't have time and right. Out of that, we derive 28,000. 28,000. And out of that, 25% goes to whom? The NCI shareholders. 28,000 into එකෙන් 125ක් යනවා NCI holders ලටනේ. ඔය කියන්නේ මේ SG, right? 28,000 into 25%, that is 7,000 from S. Then again SS. We do not have any investment income intragroup SS 20,000. 20,000 ගෙන් කීයක් යනවද ළමයිනේ 20,000 ගෙන් 100ට 55ක් NCI මේ 55ක් 55ක් යනවා ඒ කියන්නේ කීයද 20,000 ගෙන් 155ක් කියන්නේ 11,000. Again, altogether we have NCI is how much? 18,000 NCI profit. NCI. NCI. Then we have NCI, it is 18,000. The remaining balance 80,000 minus 18,000. That is the parent portion, 62,000. That is the distribution, right? I think that is clear. With that, we can conclude this session, right? Right. Thank you.